right, thanks for tuning into India Market Close right here on NDTV Profit. And, it is, the market is reliant on Reliance Industries and oil and gas. But that's not all. Just from a weightage perspective, I think if you pull up the contributors list, you will see why I'm saying so. Because frankly, about a third of a market gains coming in from RIL, the big boy, 138 or 139 points from Reliance. Then there is HDFC Bank, L&T, ONGC and some of the others. And not too many losers because HDFC Bank is not quite on the losing list, which also helps. If you pull up the heat map, you will see what I'm talking about. Right up at the far corner are the oil upstream majors, ONGC and Reliance Industries, two big boys, and Reliance more so because of the weightage of the index doing very well. Aside of that, Adani Enterprises a really smart move today. You could argue courtesy that Cantor Fitzgerald report, and we'll talk about that in detail. In fact, Harsh has spoken about it extensively already, but we'll talk about that in detail as well. So that note is the other reason why Adani Enterprises is up, but there is Coal India, there is Adani Ports which is up. So it's also as much as an Adani Group story because Adani Ports, Enterprises, Adani Green, Adani Power, all of them are doing well. RIL, ONGC, Oil India, it's not here, but I'm sure we'll mark it. And no losers. I think that's the key thing. Aside of Cipla, which is not a heavyweight, and ITC is down about 1.5%, but it's kind of getting masked with the kind of strength that we have at the large cap end of the market. Just before I give it to Harsh, can we pull up the heat map, or rather the advanced decline ratio, and show you what's happening at that end? And you will see that that has converged, which probably shows that it is a large cap dominated move today. It's not, yes, mid caps are active, but it's not that market wide we're seeing some very strong strength as the day has gone by. As the day has gone by, Harsh, the Nifty has gone up, but the advanced decline ratio has actually come off a little bit.
Absolutely, and taking the long weekend very, very seriously, it's actually helped markets, it seems, today, Niraj. But let's quickly pull up the broader markets, if we may, because that's where we'll try and identify how the movement has been. If we can have the mid cap as well as the small cap indices, overall, you're seeing that the mid cap is also moving largely in line with the large cap, 1.4% higher on the mid cap, even the small cap index in the green. So nothing to complain on either of those. But as Niraj correctly pointed out, the leaders are the large cap. If you can also have the sectoral indices, we'll have a good snapshot as to what are the gainers and the losers in trade overall from a sector perspective. And there you go. Pretty much all sectors in the green except the Nifty FMCG, which is largely flat, nothing to complain about there either. But Nifty Energy, PSU pack, Infra, as well as PSU banks actually leading the pack. Nifty Metal and Realty also not doing badly at all, 1.5% plus gains on both of those. But let's quickly take it to a few stocks which are buzzing in trade. And, I'm going to point out a few on the back of results reaction. First off, you have the likes of a Shakti Pumps up 20% in trade. You have Dodla Dairy 15% higher. Adani Green also up around 3.7 odd percent. Then you have the likes of an AU Small. Some of the financials not doing as well. AU Small, a decently poor set of numbers actually, and 11% lower on that one. Yes Bank also was lower on the back of those numbers, but outside of that you have Shriram Finance, Chola Finance, both of them doing fairly well. The NBFC pack doing decently well. You also have the likes of an Aeroflex which disclosed its numbers. Again, that one is down 5 odd percent. SBI Cards down 6+% now. And Yes Bank, as I did mention, 2% lower. You have also Adani Power, Zentech, some of the other names which were in focus on the back of earnings, both up roughly 5% odd. Some of the other stocks which are in focus, you have the likes of a Bharat Bijli, sub 3,000 crore market cap, but that one is looking at a stock split and the stock is up 13 odd percent. SJVN is up on the back of an order win. Again, good gains coming through for SJVN. Another good day of trade for that one. There you go, SJVN. Even Maharashtra Seamless, again another order win. Ashoka Buildcon also, the orders are trickling through. Ashoka Buildcon, Coal India, both of them are also higher on order wins. If we can also have the likes of the financiers, REC, PFC. In fact, that one is at a life high now. It seems REC very close to that 500, if not already breaching that 500 rupee a share mark. So those ones also in focus. There you go, 6% higher in trade today. Niraj, back to you.
Yep, let's get in our guests. Hemen Kapadia, Senior VP Institutional Equity at KR Choksi Securities, joins us on the show. Hemen, great having you. Thanks so much for joining in. Sharp upsurge, market-wide, a clutch of stocks participating. How have you observed the indices first? We'll get on to specific stocks in a bit.
A very good afternoon, Niraj. Thank you for having me on the show. It's always a pleasure.
Thank you.
Well, today it's, I believe, Sachin Tendulkar and Virat Kohli both batting together. If Reliance is Sachin Tendulkar, I think Adani Enterprises is Virat Kohli. I believe Adani Enterprises is going to move $1,000, if not more. It's not a very short-term call. Fantastic setup, great consolidation. Markets, everything is hunky-dory, Niraj, but if the Nifty is up 377 points, why is the VIX at 15.6? That is disconcerting. I'm not saying it's a panic situation, but if the market is up like it is, the VIX should be sub 13, maybe even closer to 12, and it's at 15 and a half. I don't like that. Having said that, volatility is okay. We have no F&O stocks in a ban list. Everything is hunky-dory. 21,753 is a resistance level above which we probably start making all the right noises for our all-time upside. But needless to say, Reliance has done well. Adani Enterprises will do very well. But we need HDFC Bank and the Bank Nifty to support this when these two leaders take a break. So everything is hunky-dory, but the VIX remains a worrying factor, Niraj.
Okay. So in light of that, Hemen, what are the recommendations that you're giving us this afternoon? We'll get into some key movers, but a couple of stocks from your end, please.
Well, yeah, frankly speaking, Reliance has already moved, but I would go on for Adani Enterprise. But it has already moved from the price I've given it. But nevertheless, one can buy Adani Enterprises with a stop loss. We are at 3070. The recent high, Niraj, was around 3200. I believe we are going to take that out. I'm not saying it's going to happen today, but it's going to happen sooner than later. Once that happens, we are going to see Adani Enterprises move closer to 3,700 and more. So I think a 7.5 week consolidation on Adani Enterprise, breakout at 32, I think it's a screaming buy. Maybe not at one go. Maybe you can spread your purchases. The second stock, which I like, is Astral Limited. Oversold, positive divergence, mechanical indicators turning positive. They've given a buy. So buy on Astral at 3040, stop loss 2940, target. Buy at 1860, stop loss at 1830, target is 1920. But I would say I would put all my eggs in Adani Enterprise. Every decline, it's a buy, Niraj.
Very interesting. Very bullish on Adani Enterprises there. But let me go across to Vineet, who's also joined us. Vineet, how are you viewing? How are you viewing markets? A very interesting day of trade today.
Yeah, it's great to have the markets come back in the way that they have done. And, with the trend catching up with the large caps, it's very encouraging. It tells you that the market has now got legs to move much higher. And we think that this could be a very, very good session, right, going into, around Feb 15th, where, we expect the markets from there to turn sideways to, slight profit correction, given that annual tax harvesting takes place.
Right, Vineet. What names are you looking at or sectors are you looking at in this market? What are you finding interesting in terms of valuations?
So we've been very gung-ho on the energy stocks and the power stocks, and they've all rewarded investors today. We also like the Adani pack, and if you've seen, all of them are up. We've initiated coverage on Adani, Adani Power very recently, and that stock is now picking up. So the entire Adani story, as the Cantor report has put it, is that it is a perfect play on everything infrastructure in the country. And if one has to read into what a Modi 3.0 government could be if they get elected, is going to be infrastructure all the way, and very, very heavy emphasis on infrastructure. So along with that, we have IRB also participating, which is a road infrastructure story. So that is also up quite nicely. And we believe that this trend is only going to become more strengthened over the next couple of years.
Wow. Okay. Well, Adani Power had a very good set of numbers, and no surprise that the stock is up 5%. But you know what? We're just getting started on the show. Take a quick breather, take a break. Stick around. We delve deeper into today's market movement. On the other side of the break, we also get in Saurabh Mukherjee of Marcellus with his thoughts as well.
Welcome back. Thanks for staying with us on India Market Close. We have with us, as promised, Saurabh Mukherjee, who is the founder and chief investment officer at Marcellus Investment Managers. And we have him on phone. Welcome. Good afternoon, Saurabh.
Hi there. Hi.
Hi. So talk to us about, of course, what you make of the slight rally today, but overall, how are you viewing markets and overall valuations?
I mean, look, I've never seen this sort of macro setup where we are at the top of the interest rate cycle, both in the Western world and in India. We're at the top of the interest rate cycle. GDP growth in India is around 7%. In the United States, CY 23 for them. For America, it was around 3.5% growth. So in spite of rates going up rapidly, GDP growth is healthy, stock market are at record highs. And that makes me very excited because what it tells me is as the rate cycle heads down over the next couple of years, as the rate cycle heads down, economic growth will accelerate further, stock markets will get further buoyancy. So it's a good situation to be in. It's an unprecedented situation to be in, where at the top of the interest rate cycle, fiscal conditions are good in India, economic growth is in a good place, corporate earnings in a good place, corporate balance sheets in a good place, and we can look forward to a couple of years of rates coming off and the economy picking up further strength.
Saurabh, good afternoon. Niraj here, and some stellar numbers, by the way, on your screen in Gale as well. But Saurabh, just come in. Everybody's talking about how concerned they are about valuations and could there be a dip. I know we can't time the market. I'm just trying to understand. Are you constructive about putting in every penny to work currently, or could you be tactically waiting for a better time?
So look, in small caps, there's good reason to be worried about valuations. I've never seen this sort of situation where The small cap index is up some 150% over the last 3 years without underlying attendant earnings support. There's decent earnings growth in small caps, but nothing to warrant the sort of crazy rally we've seen over the last 3 years. But in large caps, in Nifty 50 stocks, BSE 100 stocks, I don't quite see where the valuation concern is coming from. Large caps have compounded around 15 to 20% over the last couple of years. Corporate earnings growth for well-run large companies has been in that vicinity. So it's not as if on a forward PE basis, large caps are valued at unprecedented levels. Indeed, the index itself, the Nifty index itself is at somewhere around 23, 24 on a forward earnings basis, which is where it tends to be when economic conditions are healthy. So on large caps, I don't share the valuation concern. Indeed, many of our holdings, say names such as HDFC Bank, are trading at 20-year lows on PEs or price to book. So where exactly people are losing sleep on large cap valuations, I'm honestly baffled. Quick disclaimer: these are the sorts of names that we have in our portfolios and in our clients' portfolios and in our personal portfolios. So just a disclaimer on my own vested interest in the names that I'm mentioning.
Fair call, Saurabh. Well taken. Just one question from mine on one of the other movers aside of Reliance Industries today is this whole oil and gas pack and PSUs in particular. All of them have moved. Now, is it a case of they being the kind of the last bastions of valuable or stocks which are available at good multiples, whether they are valuable or no is separate, but they are available at decent P multiples, if you will, if I'm using P as an example. So do you buy that argument, or what's the reason for the upstream companies to move the way they have today? Any thoughts here?
Look, I mean, all I can imagine is whoever is buying oil refiners, and whether they are private sector oil refiners or public sector, I think is somewhat secondary. I think generally the oil refiners seem to have jumped up. Whoever is buying oil refiners believes that they'll make a great spread between whatever they buy Brent crude at and what they sell to the Indian public. On why they believe these spreads will be better going forward, I'm not so sure. I have no reason to believe that oil refiners' margins or spreads will be any higher going forward than they've historically been. But that would be the premise. I'm not so sure it's just PSU oil refining stocks, the BPCLs and HPCLs and GAILs which are doing well. I reckon the private sector players are also participating, but that's premised on a hypothesis of better refining spreads going forward, which I'm not so sure is based on a lot of data.
Point taken, Saurabh. Saurabh, I want to switch back to the macro front. Over the last month or so, we've seen FIIs intensify their selling overall on the numbers. What do you make of that? Because you are in an environment where largely it seems quite clear that the rate hiking cycle is complete. We're at the top, as you correctly mentioned. So what do you make of this, and what should one do in such a situation?
I think that was relatively straightforward. What happened was around a month ago, concerns about these rebels in the Middle East, these fellows who are blocking the Red Sea, these Houthis who are blocking the Red Sea and thus making ships go around the Cape of Good Hope. Concerns got exacerbated. There's still heightened concerns around will the Suez Canal and the Red Sea be open. If you block the Suez Canal and or the Red Sea, naturally you're taking out global container capacity because the ships have to go all the way around Africa, which is another 100 days of journey. That in turn reduces global freight capacity, which creates supply-side inflationary pressures. And on the back of that, the US bond deals rose 40-50 bips. The US bond deals, the US government bond deals, are effectively the world's risk-free rate. You push that up 40-50 bips, the FII gets spooked, pulls out of emerging markets, and we saw $3 billion of flows on the back of that. So that was the narrative. I don't think FIIs pulled money out of India or out of HDFC Bank because of a profound concern about India or Indian valuations. They pulled money out because they were spooked about inflationary pressures which could arise because of the situation in the Middle East. If the situation in the Middle East gets contained, I reckon US bond deals continue their slide downwards. The US rate cycle, the Federal Reserve moves at some stage, and like we saw for most of 2023, I think we'll see foreign money coming back into the Indian market.
Okay. Saurabh, appreciate you taking the time out and being with us. Thanks so much for sharing your views. That's Saurabh Mukherjee from Marcellus talking about, according to him, an unprecedented time of rate cuts happening across geographies, and it could be interesting what happens there. By the way, Vineet Bulinskar and Hemant both spoke about the Adani Group stocks. Adani Green reported its Q3 numbers. Hear out the CEO as he talks about what went behind the quarter.
In 2023, the global annual renewable capacity addition increased by almost 50%, the fastest growth rate over the past 2 decades. We expect this momentum to continue through the decade, aligned to the pledge taken by several countries at COP28 of tripling renewable energy by 2030. India is a rapidly growing economy, and renewables will play a crucial role in its growing energy demands. Our country has taken several policy steps to advance towards the 500 gigawatt non-fossil fuel capacity target to be achieved by 2030. The key ones include strengthening the supply chain, building the transmission network, creating storage solutions, and finally, mobilizing the capital resources to meet the significant capital outlay needed to convert this vision into a reality. At Adani Green, we remain focused on our 2030 target of 45 gigawatt, and with the latest capital raise initiatives, we are on a well-secured growth path towards this target. Let me take you through some of the important recent milestones. Post the recent shareholder approval, we have issued equity share warrants to the promoters for a total investment of rupees 9,350 crore, out of which 2,338 crore has been received and remaining amount is expected over the 18 months. We've completed JV with Total Energies for 1.05 gigawatt portfolio, thereby raising rupees 2,497 crore. We have upscaled our debt funding pool under the construction financing framework by USD $1.36 billion to USD $3 billion. Recently, we've also completed funding of reserves for entire USD 750 million Holdco bond redemption, which is due in September 2024. On the overall renewable portfolio front, we have recently also completed a PPA tie-up for the entire 8 gigawatt manufacturing-linked solar tender issued by SECI, with the remaining 1.7 gigawatt recently tied up. With this, AGL now has a total portfolio of 19.8 gigawatt backed by signed PPAs. The total logged-in growth portfolio stands at 20.8 gigawatt, further including a merchant capacity of 1.01 gigawatt. Coming to operational and financial performance for 9 months ending December 2023, we have continued to have robust performance on a year-on-year basis. Our operational capacity grew at 16% to 8.4 gigawatt, with greenfield addition of 700 megawatt solar wind hybrid, 304 megawatt wind, and 150 megawatt of solar projects. Our solar portfolio CUF remained stable at 24%, whereas wind portfolio CUF showed an increase by 510 basis points to 32.2%, and solar wind hybrid portfolio CUF increased by 750 basis points to 41.5%. Backed by the robust capacity addition and improved CUF, the sale of energy increased by 59% to 16,293 million units. Backed by the strong operational performance, the revenue from power supply increased by 57% to rupees 5,794 crore. EBITDA from power supply increased by 52% to rupees 5,412 crore, with industry-leading EBITDA margins of 92%. The cash profit increased by 61% year-on-year to rupees 2,944 crore. The run rate EBITDA stands at a strong rupees 7,806 crore, with a significant improvement in net debt to run rate EBITDA, which stands at 4.9x versus 5.6x of last year. We also continue to make good progress on our ESG commitments. As a testament of our continued focus on strengthening our ESG practices across the organization, we have been ranked number 1 in Asia and amongst the top 3 globally in RE sector as per the ISS ESG ranking. Further, AGL has been ranked first in power sector in latest CRISIL ESG assessment with improved score for second consecutive year. To conclude, given the scale of renewable capacity addition that India is looking to achieve, we need to make big and bold steps to execute mega projects. AGL continues to focus on tightly controlling key resources, including capital, supply chain, and people planning, which will underpin delivery of these projects. During the last quarter, with the equity and debt capital raise, we have put in place the capital management framework for a well-secured growth path to the targeted 45 gigawatt capacity by 2030. We continue to ramp up our execution capability by focusing on resilient supply chain with deeper emphasis on localization, digitalization at scale, workforce expansion, and competency building. As we work on the world's largest renewable power plant at Khavda in Gujarat, we will create a blueprint for mega-scale RE projects across the world.
Right, that was Amit Singh of Adani Green Energy speaking to us, or rather speaking to analysts with regard to the results of Adani Green. But let me quickly take it to Vineet for his views on Adani Green, both on the results as well as on the long-term trajectory that he sees for Adani Green. What's your view, Vineet, with regard to something like an Adani Green Energy? We did hear the CEO talk about how their margins are best in class.
So margins in solar and wind generation are always going to be very, very strong, given that, the efficiencies are known right from the beginning of the project. With this capital that they've raised, in terms of shares allocated to promoters and all, we expect that this thing should move very aggressively going ahead, given that, their road to building capacity to about 30 gigawatts by 2030. 45 gigawatts by 2030 should now ramp up very significantly. So we are quite positive on it. You cannot view the result from the numbers per se, but we have to see how much capacity buildup is happening.
Understood. With that, let's slip into a very, very short break. Thank you for that, Vineet. Of course, stick with us. We have both our guests on the other side as well. We will be talking more stocks and we will be going more specific. So stay tuned to NDTV Profit. Welcome back. You're watching India Market Close here on NDTV Profit. I have Agam standing by with a breakdown of all the FNOQs. That's what we always do at 3 p.m. Agam, what is the futures and options data really indicating about markets at the moment?
Well, they're rejoicing for now. A lot of short covering coming through, and that's largely on account of a handful of Nifty stocks. Right at the top, of course, is Reliance Industries. What a staggering up move, isn't it? And because of that, we're seeing another 1.7% up move as far as the Nifty is concerned, with about a 1.5% increase in open interest towards what looks like at the moment fresh longs. Bank Nifty futures, again, very active in today's trade. We have seen an up move around 1% there as well. Even though the Bank Nifty has given up some of its intraday gains, we're still looking at a lot of unwinding, surprisingly. So a lot of shorts into the system earlier, which are now being squared off, and now that's the reason why we're seeing open interest decline around 4.2%. It's going to be a week where at least the option premiums will remain expanded. That's, of course, as we go to in the run-up to the vote on account. And because of that, we're also seeing a lot of, not necessarily writing, but a lot of option activity around 21,300, 21,400 as far as the Nifty is concerned. Of course, this is despite the fact that the Nifty has comfortably moved above the mark of 21,600, 21,700. So where does that stack up in terms of open interest distribution? Have things changed? Because remember, until yesterday, we had max OI at around 21,500. This number will most certainly change towards the end of the session by 3:30. The maximum OI in calls will certainly move up higher, considering the kind of up move that we've seen on the Nifty. And of course, on the lower end, I'm also expecting the maximum OI input to no longer remain with 21,000, but in fact, move up higher as well, with the Nifty moving upwards. There are a lot of changes that are yet to be accounted to it, but do remember that because of the squaring off of positions, a lot of that activity also takes place towards the end of the last 15-20 odd minutes, and we're heading into that. But a lot of longs in SBI, a lot of longs in IGL and NALCO, and shorts in SBI Cards, AU Small Finance Bank and Metropolis. And in terms of unwinding, there won't be too much, but we are looking at Balkrishna Industries with longs unwinding, and SBI Life, Federal Bank, IOC and MGL looking at short covering. All in all, once again, all eyes will still stay on the benchmarks, that is the Nifty and the Bank Nifty, as we move into trade tomorrow.
All eyes on the benchmarks. Thanks for that, Agam. But, we'll quickly look at another sector which is buzzing in trade today. You're seeing oil and gas stocks in focus. You're seeing a near 7% move on Reliance, and Mihika's here to try and help us break this down. What's really aiding that performance and, the kind of returns that we're seeing on some of these stocks today, Mihika?
Yes, so it's the upstream companies that are mostly in focus today, with Reliance gaining over 7%, contributing around 140 points to Nifty 50's gain. And we also have ONGC, which is up almost 9%, and it's hit a 52-week high, and Oil India was also up 4.4% intraday. There are several factors that have been contributing to the uptake. One of the factors is the focus on the PSU companies. The Nifty PSE index is up around 9% in the past month, versus a 1% decline in the Nifty 50, which does suggest that the market has a preference to the public sector undertakings. Then it's also the Brent crude prices. Now, Brent crude prices are up around 1.5% today, and they've been up around 9% in the past month. What this does is very positive for the upstream companies, because it leads to a higher market selling price and therefore higher realizations. And another factor is that the upstream companies do trade at a very lower PE multiple. ONGC has a PE multiple of 8.91 times. Oil India has the lowest at 5.17, and Reliance Industries at 28.63. There have also been some, company-specific triggers. ONGC's expected production ramp-up at the KG block is expected to help its reach its production targets. And in terms of Reliance Industries, while there are significant positive triggers for the rail and upstream sector, its telecom business, which is Jio, is also expected to perform well with the improved pricing system and consolidation in the telecom market.
Okay, Mihika, thanks a lot for that. Himen, I heard you say at the start of the show that Reliance has already moved. So let's leave that out. What about the other group companies? There is some strength that we've seen in the recent past in some of these smaller Reliance names as well. Is there anything that catches your eye on the charts there?
I think Niraj, relatively Geo Financial Services hasn't done much. Okay, there's a paucity of data. I mean, there's not much that I can go on as a technical analyst, but whatever I have seems to suggest bullishness. The oscillators are in support on the weekly charts.
Yeah, Hemant, if I can come in. Hemant, sorry. So, there is some strength that we've seen, for example, in Network 18, TV 18. There's some strength that we've seen in HFCL. I was trying to get a sense of those names.
HFCL is going to go to 140 and 210, Niraj. Time frame would be around 2 years or so. Network 18, because why I'm saying HFCL is going to do what I said it would, it's been actually hatching eggs, Niraj, for the last 3 years. Now, after 3 years, if the stock gives a breakout, it's going to be chaos and mayhem. So I do not expect a smaller move. Yes, it's already gone from 62 to 108 in 4 months. So there could be some time price correction, retracement, consolidation coming in. But like I said, if it's done nothing for 3 years, I think it's going to give you great return. So I think it's a buy on decline sort of a story for HFCL. Network 18 has formed a rounding water, Niraj. After some years of not doing anything, we've woken up. But 57 to 135 in 6 months, I'd say wait a bit. So I would say on decline, the HFCL looks very interesting. And from the others, maybe even something like a DEN Networks and very not much to pick on. But TV 18, I believe, looks a shade better than Network 18 if I were to compare both the stocks together, Niraj.
Right. Thanks for that, Hemant. Let me switch over to Vineet. Actually, Vineet, what do you make of this oil and gas rally that we are seeing today? And, a lot of it driven by PSUs, right? How do you view some of these names? What's your sense with regard to valuations now?
So I think the valuations are obviously cheap, but I think it's more of the shift in the business plans of these companies going ahead. They're getting more green. They're venturing out into adjacent spaces of energy, and it has got the full backing of the government. And third thing is that the project time for green energy projects is far sharply reduced than your traditional capex and time plans for the traditional fossil fuel businesses. So I think we are going to see better execution, faster execution, and that means that all these stocks should do well in the long run.
Okay. Well, Vineet, I think we spoke about this in one of the morning shows that we were together, but I'm just maybe repeating what Harsh asked you. But last week, we've seen a clutch of these Waaree renewables, etc. move up. Now, my question is the better part of the juice behind, and should one wait for some bit of a corrective move in some of these solar names, or can one even buy them if you have a slightly longer term vision?
So, there is a meltdown in the companies which manufacture these wafers internationally because there's glut in capacities and the prices of the wafers are actually falling. So the better way to play this sector is to buy the energy generators and the EPC companies rather than play the pure play wafer companies.
Okay. The broader market, Harsh, interest is punctuated by some very good moves across some of the other pockets too. So Amber Enterprises, which I think yesterday or last week did some JV, if I'm not wrong, with a couple of companies in order to expand business, has shot up about 7% in the session. I'm just trying to get that announcement, but yep, right here. Amber Enterprises has signed an MOU with the Korea Circuit to manufacture PCBs in India, and Amber and Titagarh have set up a joint venture for railway components and subsystems as well. I don't know if that is the reason, but that stock is up about 7% in trade today and on very high volume. So that's one stock that is looking very interesting. The other one is Zen Technologies. On the numbers, up 5%. They spoke to Agam and they guided some very strong growth. And the third one is Shakti Pumps. on that margin expansion, has had a terrific move. We're seeing some of these smaller names on news or on results actually able to spark some really strong moves in the session today and all through the earnings season actually, which has been a heartening factor.
Well, yes, some of these infra names, especially even you look at the likes of an NBCC, an SJVN. These are absolutely buzzing in trade today as well. You're seeing 10% plus on both of those. So some of these infra names seem to be doing fairly well. And let's actually take in Hemen's pick, especially with regard to charts on some of these names. Hemen, it's been a one-way rally with some of these infra names. How should one look at it now? And what are charts really indicating for some of these?
Harsh, you bowled a googly or a dusra, because frankly speaking, like you yourself said, everything has moved up one way. So, I mean, just as you were mentioning SJV and you were talking about NBCC, I was just looking at them. Charts are looking fine, but like you said, NBCC goes up one way, Harsh, from 40 to 128. Now, it's a Hobson's choice. Now, how does one recommend anything over here without a correction? And the correction refuses to come. So, frankly speaking, it's a difficult thing. Ideally, I would want, it's like wishful thinking. Ideally, I would want a 4-month correction on a SJBN or a NBCC or a HUDCO, a time price retracement, copybook. It's like Rahul Dravid batting, but it's just not happening. So maybe one can digress a bit, look for stocks which haven't done much. NMDC Harsh gave a breakout at 150 after 12 years. We've seen what's happened. So, frankly speaking, very less to choose from because hardly anything is undiscovered from that point of view. And, we spoke about these. Maybe something like a sale would make sense because it's technically underperformed. So, for me, that's technically undervalued and cheap, Harsh.
Okay. Well, so that's one aspect. The other aspect is what some of these stocks have done. And, today, frankly, what some of the cement names are doing, not just today, but the last few days. So that's the other interesting piece as well. Vineet, come in on some of the stocks that came out with results and have seen a positive reaction. I don't know if you have coverage on, for example, a Shakti Pumps or a Zen Technologies or a Shriram Finance for that matter. Any thoughts on any of these?
So Shriram Finance is definitely looking spectacular. If you go and analyze the business of the CV market, with the 15-year-old vehicles having to be phased out very quickly, there's a lot of demand for the used vehicles as well as for the newer vehicles. So I think Shriram Finance is best placed to milk this business. They've got a very strong market share. They've been doing this all along. And I think that the valuations are fair of this counter, and it looks to be a very steady compounder going ahead.
So if you're looking for a steady compounder at fair valuations, Shriram Finance seems to be the play to be. Mr. Y.S. Chakravarti, Managing Director and CEO at Shriram Finance, spoke to us on the growth projections going ahead. Listen into that as well.
Minimum 1,000 crores is what is needed in the near term for at least next 1.5, 2 years. They would need at least 1,000 crores. So we anticipate the company to grow at probably next couple of years at 30 plus CAGR of AEM. Though they have grown by about 60% this year, that's basically because of a small base. But going forward, I think we're projecting a 30-35% of growth.
Okay. So it's been a trending day of sorts, not a big blockbuster move, but it's that kind of a stock, steady state mover up about 4%. Hemen, the consensus targets fundamentally seem to be much higher. Vineet is constructive here. On the charts, do you like Shriram Finance?
Frankly speaking, there's nothing not to like, Niraj. It's ticking all boxes. High tops, high bottoms, above longer term moving averages, no negative divergence, no overbought situations. Everything is hunky-dory. But like the rest of the market, it's moved one way. But the technical setup seems stable, Niraj. Every rise has been followed by some time and price retracement. So I would say it's a constructive move. All-time highs, no known resistance levels. Fresh buy at this level, I'd wait for a small cool-off, maybe closer to 23, 30, 40. But the long-term charts seem copacetic for a further upside, Niraj.
Understood. Thanks for that, Hemen. Vineet, if I can quickly also try and quiz you on Bajaj Finance results expected today. You're saying that particular company, AUM growth does not seem to be much of a concern. They've done 6 to 8% sequential in the last probably 3 to 4 quarters, if I recall the numbers right off the bat. Do you like Bajaj Finance, or would you prefer a Shriram Finance within the NBFC pack? What is your preference?
So I think Bajaj Finance, the earnings numbers are very well discounted. And to my mind, it looks to be overowned and fully priced. So, I would be more concerned with a negative surprise than with a constructive positive growth, because the valuations are aggressive. And, it's a different thing that, it's very difficult to come out with a business model like the Bajaj, the way they built it out. It's going to be a cherished stock to own, a blue chip. But currently, just like HDFC Bank, it's suffering from that over ownership angle. And until something, spectacular does not happen, which the market does not seem to have factored in everything positive, it's just about a hold for me.
Understood. Point taken. Vineet, Hemen, if I can switch over to you. And I want to switch sectors also. I want to try and focus in on pharma, because some specific names in pharma have done extremely well. You take the likes of a Lupin, the likes of a Sun Pharma. Hemen, anything within pharma that you seem to prefer at this point in time?
I think, that Biocon hasn't done much, Harsh, if you look at the scheme of things. The Nifty Pharma Index is at 17,600. It crossed the earlier high a couple of months back. So it's doing wonderfully well. Something like a Biocon, which hasn't done much, is oversold. So it would be a slightly sketcy choice because it's underperformed. But I believe things are slowly and steadily turning from a longer term point of view. So from the stocks you mentioned, Lupin has a superb move. Once again, it's moved one way. So if I were to take from one of the picks of one of the winners, I still feel that Glenmark Pharma has the capacity to surprise. We've had a 3-month correction followed by a breakout, and we are in a very established longer term uptrend. So I believe Glenmark Pharma is the one which is already moving. But from the others, which if one hopes to play catch up, I'd say it's a dark horse, because there are a few technical question marks already on Biocon, but I think that's the one I would pick. So Glenmark amongst the winners, from the one which have moved, and from the one which haven't moved, Biocon.
Understood. Thanks for that, Hemen. Vineet, if I can quickly go across to you. Pharma, largely a space where results still expected for Q3. What are your expectations from this time around, and how are you looking at valuations now?
So we are quite positive on the pharma story, and we believe that it's a good defensive against a market which has rallied so much, and where investors have concerns for where these markets are headed. So it's good to get into the defensives. Oil space was one defensive for us, which has played out. The other one we feel is the pharma space, and here Cipla is one of our top picks out there.
Okay. Before we thank Vineet, I want to take his views on cement, which I'll do in a moment, but it's 3:20. So that time of the show wherein we should get some closing strategies going. So, Hemen, I'll come to you first for that. Any closing strategy from your end? Hemen, yeah, a BTST or an STBT, whichever shape. Sorry, are you on mute, Hemen? I can't hear you.
My bad, I was on mute. But, okay. Am I allowed to give a Bank Nifty call, Niraj?
You are allowed to do whatever you feel passionately about, Hemen.
Okay, fine. So I would have a BTST on Bank Nifty. I'll just 20 seconds. I'll just tell you the logic for that. Thing is, the Bank Nifty has done nothing for 5 hours, and now it's beginning to show signs of life. So I would say that I would do a BTST. We are at 45518 in the Nifty spot. So I would say maybe a 70-point stop loss and a 150 to 200-point target. A BTST on Bank Nifty. I think it's going to give you money tomorrow, Niraj.
Okay. Hemen, thank you for that. And please take your time in explaining your strategy, Hemen. Might as well people understand and the whole rationale from you. when you're giving out your call. So thank you for that. Now, Vineet, I'll come to you on cement because I know amongst everything else, you look at cement for a really long time. So I would love to understand from you whether you believe the cement numbers that have come out thus far are validating your earlier optimism. And are you more constructive now, or have some of the stocks become a touch expensive?
No, I think the cement pack as a whole had been very, very tepid over the last few quarters. And we believe that FY25 is going to be the year for cement stocks, and notably Ambuja Cements, because we see a lot of capacity coming up, and with the economies of scale playing out for all the companies, their margins are going to get better, and volume growth hence is going to be also better.
Okay, fair call. Vineet, any thought on Sanghi? Because there was this announcement, everybody was constructive on Sanghi because of the capacity addition, but then I think there came this message that, or the announcement which seemed to suggest that Sanghi might become a cost plus kind of a company as well. Any thoughts on Sanghi?
So what they're doing out there is, although there is cost plus, the loans that have been given to Sanghi, where the group is, I think, free of interest cost, if I'm not mistaken about. So it tends to balance out whatever that cost plus the factor is going into it. And Sanghi will consolidate. I think I will buy it on dips, but Ambuja is my clear bet. Play with the company which has got clear fundamentals. That is what I would like.
Okay, and fair call. Vineet, before we let you go, an idea, a fundamental idea, something that you clearly believe in. I know you at the start of the show told us about a couple of names, but I'm just trying to understand, is there a undiscovered small cap name? Because small cap seems to be the buzzword, and I was looking at a statistic which said that while people may be scared about small caps, the 3-year CAGR profit growth for the NSE 250 is about 48% until FY23. FY24 isn't looking too bad either. So yes, they might be expensive, but they've done really well on the profitability front.
So there is one stock which I like. We don't have coverage on that. Is Yatra, that online that you can look at. It listed very recently. The entire travel segment is performing very well. And Rate Gain had come out with a disclosure saying that Yatra earnings growth in Q3 was 30% higher than last year. Now the market is not reading much into this, and I think that could be a stock which could surprise investors on the upside.
Sorry, Vineet, I missed the whole rationale.
Yatra online.
Yeah, but I missed the rationale. So why is it that you believe you want to do this? Sorry, why do you like it?
So one is, there are a couple of things. One is that, they've done a substantial cost saving out here. Two is the tailwinds of the online segment for hotels and airline booking. We're seeing the way things are playing out. And the third thing is, Rate Gain software, which is used by Yatra. Rate Gain actually came out into the market and made a statement that Yatra Online has grown its revenues at 30% QOQ. So that is a very, very strong indicator that, the results could be a little bit of a surprise, because, they listed last quarter, they reported a negative growth in numbers. And I think this quarter will be the turnaround for the company. So that is going to be very interesting to watch.
Fair call. Vineet, we'll let you go on that note. Thanks for taking the time out and being with us today and giving us your thoughts. As we wrap up the show, Himen, one question to you is on the PFC REC twins, which have resumed a bit of a rally, up 6.5% apiece for both of them today. Is there more in store? Would you trade them?
Yes, Niraj, I think there's more in store because the laws of gravity don't apply to either of them. But PFC has consolidated, Niraj, 1, 2, 3, 4, 5, 6. It spent 7 weeks consolidating between 370 on the downside, 430 on the upside, 7 weeks. Okay, that's not a very small thing. The retracement have been very shallow, Niraj. What I mean to say is the undercurrent is strong. That's why despite the rise, the quantum of the correction, the time was taken, but the correction was small. So, and now it is broken out from the drain. So I believe PFC is heading towards 500. I'd stick my neck out and say we are going to 530 or 540. I'm slightly constrained on the time frame, but let's say this is probably a 6 to 8 week 8-week call. But yes, PFC breakout, I'd put my bet on it. I'd give it as a buy. Stop loss at 415.
Right, thanks so much for that, Hemen, and for all the views on the show. We'll let you go on that one. But we're very close to close, and you're watching India Market Close. We'll quickly look at where benchmarks currently are at. We have a 1.9% gain on the Nifty 50. We've gone from strength to strength this Monday morning. We've come out strong after that long weekend. And the Nifty Bank also showing some bit of positivity, 1.5% higher as we speak. Let's also look at the heat map to try and understand where the gains are largely coming from. The depth of the market is good, especially where the large caps is concerned. You're seeing 41 stocks in the advances. You have the likes of a Cipla and ITC, some amount of earnings reaction or pre-earnings reaction, if I can call it. You also have the likes of Britannia and a couple of IT names, Tech Mahindra, LTI Mindtree, as well as Infi, which are in the negative. But otherwise, let's talk about the positives because there are plenty to speak about. You're seeing the likes of an ONGC up 8.5%, Reliance Industries 6.5%+ higher. You're seeing Coal India, again, order wins continues for that one. Adani Enterprises also up 5.5% on the initiating coverage note coming in. Then you have, of course, the likes of a Hero and a whole host of other counters which are solidly in the green, 2+% pretty much for nearly 15 to almost 17 stocks. So it's a very strong large cap driven market. Let's also look at the contributories on the Nifty, and we have close as we speak. Let's look at contributories on the Nifty, and what we'll largely see is Reliance Industries leading the pack. If we can have the contributories, and we'll see Reliance Industries leading the pack by a mile. We've closed roughly 380 points higher, but you can see Reliance Industries contributing 140 of those points. So very solid. Outside of that, you have the likes of an L&T and HDFC Bank, which are the other two biggies, contributing nearly 60 points. So 200 points by these three names alone. Among the losers, nothing meaningful or significant. ITC, Infi, Cipla not much, but ITC and Infi may be contributing just about a bit. So no real concern where the losers are concerned. But quickly switching focus to the sectoral indices, and you'll see the oil and gas sector was up and away. Energy was up 5% plus. If we can quickly have the contributories of the Nifty Energy, and you'll see a whole host of names, all of which are contributing to that 5% gain on the Nifty Energy Index. There you go. You have ONGC, RIL, Reliance Infra, all of which powering the energy index through. Also, if we can have the Nifty PSU Bank, because that one was the other one, up 2+% in trade today. The PSU pack was a buzz, and all of those banking counters in focus. Of course, earnings, some of which is yet to come out, so maybe a bit of that as well. But for now, on India Market Close, we're completely out of time. From Niraj, myself, everyone who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit. Of course, we'll have more on the other side.